All right, the time is 8:05 a.m. Central, so 25 minutes before the open. Let's jump into the exercise and plan out some trades for today. Now, 45.52 quarter to 62 quarter is the key area of support. That's the spot that needs to hold if the recent multi-day balance and range is going to remain in play. As I mentioned in the morning video, if the market is really going to head higher in any significant way, ideally we want to see buyers active at 45.66.75 to 72.75, and a break below that area can result in a test of initial support, which of course still has potential to hold. So that's the 45.52 quarter to 62 quarter zone. And if the market is strong and we're going to head higher in any significant way, we want to see the market holding 45.66.75. The big question today is whether the weakness that we've seen in the overnight session is going to result in any kind of follow through, or have we now seen buyers step back in at the balance area low and now the market is going to head back up to the recent highs. I think early in the session, how the market behaves at the pre-market support, so that's the 66.75 to 72.75, is going to be very telling. Now that creates a challenge because if the market breaks below 66.75, well, this key support is still intact, but if we're breaking down on trend down type conditions, then of course there is the possibility of a break of that zone, and if we get a breakdown below that zone, then we have our bearish confirmation. That being said, we don't have any major economic catalysts as far as economic reports go or earnings announcements go, so I think what is going to drive the market today perhaps could be the downgrade of the U.S. credit rating, which I don't think is really going to matter as much, at least in my opinion. I'm not a fundamental analyst, but I think the U.S. is going to be okay. So that news has probably already been digested by the market. We have several economic reports due tomorrow morning. We have Apple and Amazon reporting earnings after the close. That, I think, is a more significant catalyst. Following that, we have the employment report due Friday morning. So, given those upcoming catalysts, I think the chance of a breakdown below 45.52 quarter is actually lower. So normally, I would think, well, if we break 45.66.75, then that is already a sign of weakness. So why buy initial support? But in this case, I think the support zone is strong enough, and I think that there is not a big enough catalyst to take that area out, so it's still worthwhile to consider a long setup there. But on the upside, the final target should be at the most 88. I don't think that at that point we want to shoot for a big move back up to the recent highs. It's certainly possible, but the fact that we've already seen such a large response off of initial support in the overnight session, I really don't want to see the market going back down there if we are going to reverse. And if the market goes back down there, we can still hold, but maybe the response isn't going to be as big, or maybe it's just going to take longer for that response to play out, which means that the market goes down there, we consolidate, we balance, and then maybe we break down, maybe we break out, right? So I think it's going to be a longer hold, or I think that is what's going to be required in order to make that trade work. So if it's going to be a longer hold, then I want a relatively quick scale out. I don't want to sit there with a full position on, waiting for the market to play out one way or the other. If that scale gets hit, I reduce my risk by 50%. Something I talked about in yesterday's recap is that you need to have the ability to predict how you are going to respond if the market does X, Y, or Z. And I know that my response is not going to be doing me any favors if the market continues to chop around initial support, especially if, as it's chopping around initial support, the AD line continues to trend down and the tick is kind of mediocre or starting to hold below zero, that I know is going to make me second guess the quality of that trade, and I would be more prone to short circuiting the trade via an early exit. Now, you could say, hey, you're a professional trader. Why don't you have the mental resilience to just sit through all that chop, let the trade play out one way or the other? Worst case, it's -1R. Yes, I can tell myself all that stuff too. But I know myself, and I know that I don't want to sit in a volatile range while the market tries to figure out which way it's going to go. So I'm going to be more selective today. I might miss out on some good opportunities today as well. So I have to accept both sides. There's no free lunch. You can't say you're going to play defense and then be pissed off that you missed the trade. If you've already agreed that, hey, I'm going to play defense, I'm going to wait and see how the opening range plays out, how maybe the first 15 to 30 minutes play out, and then you end up missing the ideal trade, or what would of course appear to be the ideal trade after the fact. It wouldn't be the ideal trade in the moment, because if it were, you would have taken it. So I think it just requires enough awareness, and if you can prepare for that, if you really know yourself well and you know how you're going to respond to the market, then you should be able to manage your mental state in a much better way. So we are going to set up a trade at initial support, but again, I want that scale to be easy to hit. And at 58, it would be relatively easy to hit. And this is actually what Vulcan put out as the default scale target and entry, and that looks good. So if we come down to 58, I will consider buying. 66.75 to 72.75 is pre-market support. That I'm using more as a gauge for the market's level of strength and weakness. As I mentioned in the morning video, if we're holding above it, it's a sign of stability, and if we're holding below it, then it is a sign of weakness. So I'm not necessarily looking to execute at 66.75 to 72.75. I'm really using it more to help me gauge the state of the market. On the upside, we have pre-market resistance at 45.80 to 85.75, and then 88 to 96 is the initial resistance zone. There could be potential for a shorting opportunity, but again, I feel that I need to take a wait and see approach, because if larger time frame buyers have indeed stepped in at the balance area low, then there is certainly at least the potential for a breakout above the overnight high. And that's why I think I need to be a little bit more cautious at the pre-market and initial resistance. So I am going to set those trades up, and in this case, I do want my final exit to be ahead of 58. So I don't want to shoot for that aggressive of a target. So I'm going to go ahead and I'm going to get out at the top of the zone, actually. 62.25 I think makes sense here. And in this case, we will use the bottom of pre-market support at 66.75. So we'll set this to 67. Actually, if we go up into initial resistance, I'm going to want my high probability to be 80 in this case, which is the overnight VPOC, and then my final can be that. So 92, 82.25, that looks fine. So these are potential trades that I would consider. Now, in the event that we break down below 52.25, we would have that bearish confirmation, so I can also set up an intraday balance breakdown trade ready to go. And yesterday I said that if I'm fading the balance area low, I want my stop to be at 50. Today, I don't feel the need for that. I think that either we hold the overnight low and we continue balancing in a range and we eventually head back up, or if we take out the overnight low, as long as that breakdown is happening on trend down type conditions and mainly sustained downside momentum, I don't think that having a stop at 50 is going to help. So I think if you take out the overnight low, the likelihood of the market hitting my stop at 51 quarter or 50 is about the same. So there's no point in having my stop at 50 at this point in time. Yesterday, I think it made sense, and that idea played out really well in the overnight session. But at this point in time, I think if you put your stop at 50 or 49 or something, I don't think it's going to matter. I think if we get a sustainable breakdown, we're going to take out 43 quarter to 47 quarter, and we're probably going to take out 34 half to 37 half, and then we may find buyers at 21 quarter to 30 quarter, and we are much more likely to find buyers at 45.09 quarter to 17.75. So looking at the intraday balance breakdown trade, we can see that the scale out is at 43 half, which is good. It's within the next zone. The high probability is at the top of the next zone. After that, skipping this one, it's not as significant, so 30 quarters, so that is good. That makes sense. And then the final is 17.75. Now what I might do is, if there is a legitimate balance breakdown and trend down type situation, which, given that the market's running on 200% relative volume is certainly a possibility that we need to be open to, then I might actually change the high probability target to the back of this zone, 21 quarter. So in that case, I might actually change this to 21 quarter, and I might just take the whole position off actually at 21 quarter in that situation. Or if it's a pure trend down type situation and we are liquidating, then perhaps I'll hold the final target for a little bit more, but I don't really want to press it down here because 45.09 quarter to 17.75 is the range extreme. So many times buyers will start stepping in, especially to cover shorts ahead of the range extreme. So I think the safe bet would just be to exit entirely at 21 quarter. And of course, these things are open to change, right? I mean, right now it's 8:18 a.m. Central Time. This is a trade planning exercise. It is meant to just put you ahead of the game, right? So that you've already thought through the targets, the stop placement, the trade ideas, and then in the moment, you don't have to do all that mental math. And your focus can be on maintaining mental state and fine-tuning or just simply executing. I mean, you don't even have to fine-tune. The entries and exits and everything, the targets are already kind of pre-fine-tuned via this exercise. So then it's just a go or no-go decision. Do I take the trade? Do I not take the trade? And of course, based on intraday patterns, you may have to tweak the entry and targets and whatever. But, that's much easier to do when you've already laid out a well thought out template, which is what we're doing right now. Now, if we do break down, I would be open to attempting a long at the 44.91 quarter to 4500 quarter area. Number one, it would be a range extreme. Number two, it is a larger time frame bull bear zone. So certainly open to a bounce over there. I think that in this case at 09 quarter 1775, it would be more of a tradable reaction, not necessarily a reversal. So I do want to be a bit more conservative with my targets. So I am going to adjust my high probability to be 27, and I might revise this, but I'm going to change this to be 34 half. So just 2R is kind of what I would expect off that. I'm not looking for a bigger move. And if we do push all the way down to 44.91 quarter, which right now seems low odds, but we're just planning, right? That I think would have potential to bounce back up into 21 quarter relatively quickly, and even 34. And even if I get out at 21 quarter, exit the entire position, still 2.5R. So I do like that. So that's going to be on the downside. let's think about the short side because the overnight has been quite weak. So for all we know, the ideal trade might end up being on the short side. Now, if we take out initial resistance, then I think there's going to be a good chance to test yesterday's RTH high around 4609. And even that area could get taken out. Now, that would mean that we have an outside day, which statistically is lower odds, but we're running on 200% relative volume. That is not the statistical average. So we are already seeing a situation that is not typical, right? It is not something that is average. We're already seeing signs of a outlier type of day. So when you're seeing signs that are already telling you that this could be an outlier day, then it doesn't make sense to apply statistical averages because by definition the day is not looking like it's going to be average. So we could get an outside day. So normally, if we were kind of dealing with more of a typical market situation, I would be looking to short, leaning against the previous day's high, since we're opening below the previous day's low, leaning on that statistic of having a low probability of the previous day's high getting taken out, because that would require an outside day. Normally that would work pretty well. Today, however, I think that because this is not typical, we could get a day that's also not typical, and that's why I don't think that the stats are as meaningful or relevant today. Now, there could still be a short available here. If it is, I'm not going to look for a move down to 72, 75. It's going to be more of a reaction type thing, and I think the high probability target will likely be 46.01 or 01 half, and I think the final in this case would perhaps be 96, but it might even just be a response to the 01 area, right? We might not even get a huge response off that zone. So we can see that, to even get 2R based on that, we would need 1075, so it would already be an outside day. So, not exactly thrilled about that idea. There might be something there, but I think it's going to be a setup where if you're shorting ahead of yesterday's RTH high, the challenge is going to be you don't have necessarily a lot of risk reward. You can see if I short, 09, I'm not really getting much risk reward there. So yeah, it doesn't really look all that attractive. This would be much better, 16 to 26 quarter, because we could still get a move back down to 46.01 area. So let's go and just set that to 46.02, and the high probability, let's set to previous RTH high. That should be a quick reaction. So yeah, if we get to 23, I think that could be decent. Similar idea here, except we're going to get out ahead of the RTH high because if the market breaks out above 09 quarter, what could happen is that the 09 quarter to 11 quarter area could become a low volume node. Like that could be a breakout spot where the market kind of pushes through, and if it's a wide range bar and we're pushing through that area, it could create a low volume node, and it would be an intraday balanced breakout spot. And I think that if the market ends up pushing higher into 16 to 26 quarter, that area could then start to act as support. So I would like to get out a bit ahead of that because that could be it. So 26 would be great, and let's change this to 11 quarter as well, and let's see what that looks like. Okay, 26 would be good, and if we end up going down to 02, then 23. So 23 to 26 is the execution spot for this zone. So we'll see. If it gets up there, it will likely be quite exhausted, and a reaction down to the previous day's RTH high should be relatively high odds. And if we see a momentum shift, then perhaps we can go back down to 46.0102. But I don't want to structure the trade where 46.02 is what gives me my 2R. I want it to be where if it only gets to 11 quarter, I still get over 2R, which is what this is. And so 31.75. And if it gets to 11 quarter, I still get 2.5R. That's good. That's a range extreme. Yeah, I think that should do it. That's about the template that we can set up. Let's set up one additional trade. And in this case, we are going to put our stop behind the gap, 64. So we'll put it at 64. Let's see what that looks like. So that's a possibility, 45.70. But again, that's going to be based on reading the market in the first 10-15 minutes, making a decision based on how the opening range is behaving. Most likely, if the market's going to go higher, I will probably not get this fill at 45.70 because by the time it becomes apparent that the market is setting up to go higher, I probably will not get that execution price. So it's there, but the likelihood of me getting it is relatively low because if the market is strong, it probably won't give me the price I want. And that's the challenge with today, is that if the market is going to blast higher, it probably will not give me good trade location, and I'll need to find an intraday balanced breakout type pattern perhaps, or a pullback continuation pattern perhaps, and those are real-time market reads. Those are real-time trade setups, and we can't really pre-plan for those. We can still prepare for it mentally, and we can still think through kind of what might materialize and be at least psychologically and mentally prepared for that. But we can't really pre-plan those because it's very dynamic, right? So that is a wrap on today. It's 8:28 a.m., so the market opens in 2 minutes. So we'll wrap up here. Get ready for the day. I hope you guys all trade well. Good trading, and until the next one.